Let's start right here. Your reaction to what we just got from Vienna an hour ago.
Well, first, thank you very much for having me, and it's good to be here with everybody this morning. Look, today we continue the same policy. We're at 50. This is the 50th day that gasoline prices are down in the United States. We were about $5, over $5 about 6 weeks ago. And today most Americans are seeing gasoline prices that are below $4. Prices at oil markets, oil prices were at about $120 a barrel about 6 weeks ago. And today we're at about $95, $96 here in the United States. So that's a $22, $23 decline in oil prices in 6 weeks. That's remarkable. And so the president wanted to see oil prices down, wanted to see gasoline prices at the pump down. That's what we're seeing. And I think what's very remarkable here is that we're seeing that happen while one of the largest oil producers in the world is in the middle of a war in Europe and is under sanctions. So this is not an easy time to manage energy markets. We want to see lower prices. These are lower, but not low enough, and we're going to continue to try to do that.
I'd like your understanding of what you think happened in Vienna specifically. BTIG and Isaac Boltanski in the previous hour was on Bloomberg Surveillance with us, Amos, and he called this, quote, the geopolitical equivalent of a slap in the face. Is it a geopolitical equivalent of a slap in the face of this administration after that meeting between the Crown Prince and the United States President?
Well, as you know, that the OPEC decision just about a week before the president traveled to Saudi Arabia, they announced the increase in production in July and August. Yesterday, I believe your network published that Saudi Arabia had increased production at remarkable levels in July. So, no, look, the president went to Saudi Arabia not about oil. Energy was clearly a very important topic. But think about what happened on that trip. The president was able to save thousands of lives by extending the ceasefire in Yemen. So after 7 years of people dying on a daily basis, we now had 16 weeks of a ceasefire. And yesterday we announced the extension of that by another few months. Israel is more integrated into the Middle East, and we have a more stable Middle East than we had when we inherited and came into office. At the same time, oil prices were at $120 6 weeks ago when we announced the trip. Look where they are today. So the importance that the president has is not discussing barrels with any country. He has been very clear that he wants to see oil prices come down and he wants to see gasoline prices come down. Both are down and not enough. It's not just a global issue. You've seen just a week ago the results, the second quarter results of oil companies in the United States and around the world. They were record profits. What we want to see is those record profits that have come on the back of the consumers be invested back to increase production here in the United States as well. So we're calling on, whether it's OPEC or it's here at home, to increase production when possible and at the degree that is necessary to keep these prices coming down. And I think we've been able to achieve exactly that.
Amos, as you know, for them to make those long-term investments with confidence, they need policy continuity. How can that be guaranteed to them at the same time as a conversation is ongoing about ending their activities full stop completely? You understand the difficulty around that story. How do we promise these producers any kind of policy continuity over the next decade, the next 2 decades?
Well, let's if we put away all the hyperbole from the industry a little bit, let's look at this for real. Here in the United States, most of the production that we're talking about increases is onshore in the United States. Those are short cycle productions that don't need 10 and 20 years of investment certainty in order to be able to make profits. At these oil prices today, they can invest those dollars today and get the profits that they need and give the relief for the American economy and the American people. We know that. Second, we're in the middle of a transition. We want to see declining demand for oil over the medium and long run, and that's what we're trying to do. That's why we're trying to accelerate electric vehicles. But you and I both know that that's going to take the time. And so we need to do two things at the same time. We need to make those investments today in order to have enough of the energy resources that the American economy and the global economy needs while we accelerate electric vehicles and renewable energy. Demand for energy is growing at a remarkable and unexpected. Nobody thought it would rise this quickly after COVID. Think about where we were a year ago with Omicron threatening to shut down the global economy again, and it didn't. And now we are at a post-COVID remarkable demand for energy, and we need to meet it. And we need to invest into our future as well.
Well, Amos, I wonder how we can meet that in the shorter term. And I think this right now is the big issue. You've taken a lot out of the SPR. OPEC Plus this morning is saying we're severely limited when it comes to spare capacity, and it must be used cautiously. We've seen chronic underinvestment. It's led to low spare capacity. Do you have a deep understanding of how much spare capacity the world has right now, Amos, and the risk around that story? And I think it's something we've all got to recognize going forward from here.
Well, I think that we absolutely need to be focused on that, and I can assure you that we are. And that's why I keep saying this is not focused on OPEC. This is a global issue that also has impacts here in the United States, and that's why the president has consistently called on the industry here in the United States to increase capacity. They do have the capacity to increase. There's no doubt about that. The idea that a company in this environment that you just described would buy back shares and not invest it into additional production, that would buy back shares and increase dividends and not invest into ensuring that we have more refining capacity, bring back some of the refineries that were idle during COVID. That's what we should be focused on. The president has told the industry, we're willing to work with you. And I think I say that again today. We're willing to work with the industry to increase production, to increase refining capacity, and to make sure that we have enough production for the American public.
Amos.
At the same time, you can't deny the fact that prices are significantly down over the last 6 weeks, and that is something that we want to continue to see happening for the weeks to come.
You're speaking about private companies making decisions that they think is best for their investor base. That's capitalism. At the same time, you're describing what you would like to see from a public utility. Well, that's a sovereign state. And we can talk about sovereign states making those decisions today. They're not making those decisions to boost output. Now, can you take me into the room with the Crown Prince Mohammed bin Salman? And you said that that meeting wasn't just about that. I want to understand what your expectations are now from the kingdom on oil output and whether they were met this morning off the back of that very short meeting from this cartel.
Well, to be honest, we did not really discuss oil markets in that meeting. We had far more pressing issues to discuss. We obviously discussed energy as part of it, but it wasn't the lion's share of the meeting. As far as what they did today, look, I will say this again, I am concerned that oil prices continue their trajectory of going down and maintain the stability in the markets as we are continuing to follow developments in Europe in the war and the invasion of Russia and the remarkable impact that it's had on the global oil market. So this is not just about spare capacity, it's also about what's happening as a result of the war. I want to see that our expectations are that OPEC will continue to increase production and meet every month to decide what it needs to do to maintain adequate supply on the market. I'm looking at the price today. I'm looking at the price not just on an hour-by-hour basis, but as we broaden that aperture. Over the last couple of months, we've seen the oil markets react in the way that I wanted, but it's not enough, and we want to see more. So we have the decision today to continue increases that, quite frankly, were supposed to go to zero, and we'll see at the meeting next month where the market is and what OPEC does then. And we will continue to have the same message, whether it's a sovereign or if it's a private company. This is the time, if you have the capacity, to invest in it and to be able to make sure that the global economy has what it needs to continue to grow. Because if it doesn't, both the sovereigns and the private companies will suffer the consequences as well, and most importantly, the American people will. And that's not what we want to see.
Amos, you can see why some people are frustrated by the rhetoric. The administration has been very keen to go after the domestic producers, and quite aggressively so. Yeah, when we talk about OPEC Plus, we kind of tiptoe around the story a little bit, and I'll allow you to jump in on that in a moment. I just wanted to share this stat with our audience and with you as well. Julian Lee here at Bloomberg has broken down this 100,000 barrel a day increase today. Shared pro rata across OPEC Plus members, it would raise Saudi Arabia's target by 26,000 barrels a day, not even enough to fill one Suezmax tanker a month. Amos, why the harsh rhetoric on private companies in America and not a harder line with the Crown Prince and the Kingdom?
In fact, I don't think I've had any harsh rhetoric at all. I'm saying that I would think that producers in the United States should invest more. We've been meeting with them. I talk to them all the time. I don't think that that's harsh rhetoric. In fact, I think that if you listen to the comments by some of the CEOs of the major U.S. producers, they themselves over the last several weeks have said that they intend to increase production and to invest in additional capex. So I think that as long as they do that, we're on the same page. When it comes to OPEC, I've said it clearly. I think that we wanted to see additional increases. We saw that at the beginning of June for July and August. We saw the numbers that you published yesterday at Bloomberg, where Saudi Arabia increased production in July. They're going to continue the increases in September. Whether or not it's adequate, we'll find out as we continue to monitor the oil markets. We expect producers, whether they're sovereign or private, we have the same expectation that they increase production where their capacity allows it, and to support global economy to continue to grow and to make sure that the price of oil allows that. That's what we want, and I don't see any difference between the two.
I wanted to get to the final topic, and thank you for your time this morning again, on the oil cap, on Russian prices of Russian oil. How's that working out, Amos, and is anyone else on board when it comes to the likes of China and India?
Well, I think what we would like to see is to see continued supplies on the market. We're not trying to reduce the number of Russian barrels on the market. We're trying to reduce and to cap their revenues. And we already know that they're open to that. They're selling their oil today at significant discounts on the market already. We've worked with the G7 allies. We were in Europe last week discussing it with some countries as well, and we continue those discussions. As far as other countries joining, I think we're still putting the mechanism together and discussing it with other countries.
Does it work if you don't have the likes of China and India on board? Amos, just from me sitting here listening to this, how it's played out over the last few months, I just don't see how it works without those two countries on board. How does it work?
Well, I think, John, that whether they join formally or not, at the end of the day, if countries are buying Russian crude at significant discounts, I'll let you decide if that's working or not.